Picture this. It's 2007. Everywhere you look, people are buying houses. Banks are handing out loans like candy. Your neighbor just bought a second home. Your cousin says buying houses is the easiest way to become rich. It feels like the good times will never end. But while everyone else is celebrating, one man is quietly looking at the numbers. His name is John Paulson, and he's asking one simple question. What if this whole thing is about to fall apart? Everyone thought he was crazy. 1 year later, he made $4 billion from that idea. But the same man who became one of the greatest investors in history later made one mistake that changed everything. This is his story. Back then, almost nobody knew who John Paulson was. He wasn't a celebrity. He wasn't on TV every day. He wasn't the biggest name on Wall Street. He simply managed money for wealthy people. Then he started looking closely at the home market. He didn't just believe what people were saying. He wanted proof. So he read thousands of mortgage records. He studied the loans banks were giving people. The more he looked, the more worried he became. Many people getting these loans couldn't really afford them. Some had low incomes. Some had bad credit. Some didn't even have enough money to pay the loan back. But the banks kept giving them money anyway. Why? Because everyone was making money. The banks made money. The people selling houses made money. The companies packaging these loans made money. So nobody wanted to admit something was wrong. Have you ever noticed that when everyone is making money, people stop asking questions? That's exactly what was happening. But John kept asking questions. And after months of research, he reached a shocking conclusion. The housing market wasn't strong. It was standing on very weak ground. If enough people stopped paying their loans, the whole system could collapse. Most people laughed at that idea. But John believed it. So he did something almost nobody else was willing to do. He went to one of the biggest banks in the world and said, I want to bet that the housing market is going to crash. Not a small bet, a huge one. About $25 billion worth. Think about that. Almost everyone else believed house prices would keep going up. John believed they would come crashing down. He was betting against almost the entire world. Many people thought he had lost his mind. But he didn't change his mind. He trusted the research. He trusted the facts. And then 2008 arrived. The housing market started falling apart. Banks began to fail. Millions of people lost their homes. Families lost their savings. It became one of the biggest financial disasters in modern history. But while almost everyone else was losing money, John Paulson's bet was paying off. By the end of the year, he had made around $4 billion in just 1 year. $4 billion in just 1 year. Take a second to think about that. John Paulson didn't just make a lot of money, he made history. Almost overnight, everyone wanted to know who he was. The man nobody knew a year earlier was suddenly one of the most famous investors in the world. Newspapers wrote about him, TV shows wanted to interview him, books were written about the trade that made him famous. People called him a genius. Some even said he could see the future. His investment company grew incredibly fast. Before the housing crash, he managed only a small amount of money. Now, people from all over the world wanted him to invest for them. Soon, he was managing about $38 billion. That's more money than most people can even imagine. By 2010, he was earning billions of dollars every year. Everything he touched seemed to turn into money. Imagine what that does to a person. You make one of the greatest financial predictions ever. You prove almost everyone else wrong. People praise you every day. after a while, it's easy to believe you can't make a mistake. And that's where the real story begins. John started looking for his next big win. He thought, if I figured out the housing market, maybe I can figure out what's coming next, too. Around that time, the U.S. government was putting a lot of new money into the economy. John believed this would cause inflation. Now, inflation simply means that money buys less than it used to. When that happens, many investors buy gold because they believe it will keep its value. So John's idea sounded reasonable. If inflation goes up, gold should go up too. Simple. So he created a brand new investment fund focused mainly on gold. And because of his amazing success with the housing crash, people trusted him. They gave him billions of dollars to invest. At first, everything looked perfect. During its first year, the gold fund made about 35% increase. Once again, people said, John Paulson is a genius. It looked like he had done it again. But there was one problem. Things don't always go the way you expect. And soon, everything started changing. The next year, something strange happened. The price of gold was still going up. That should have been good news. After all, John had invested heavily in gold. So why was his fund losing money? Here's the reason. John didn't just buy gold. He borrowed money so he could buy even more. This is called leverage. Think of it like this. Imagine you have $10,000. Instead of spending only your own money, you borrow another $90,000. Now you're investing $100,000 instead of $10,000. If everything goes your way, you can make much more money. But if things go badly, something goes wrong. You lose money much faster. That's exactly what happened to John. The market didn't move the way he expected, and because he had borrowed so much, his losses became much bigger. His gold fund fell by more than 36%. Then things got even worse. In 2013, gold prices dropped hard. John's fund crashed. It lost about 60% of its value. Billions of dollars disappeared. Most people thought, this has to be the worst mistake he ever made. But believe it or not, an even bigger mistake was still coming. While John was dealing with the problems in his gold fund, he made another investment. This time, it was in a company called Sino-Forest. The company said it owned huge forests in China and made money by selling timber. On paper, it looked like a great business. John believed it would grow, so his team invested hundreds of millions of dollars. But here's what makes this part of the story so surprising. Think back to how John made his $4 billion. He didn't guess. He didn't follow the crowd. He and his team spent months checking facts. They looked through thousands of records. They questioned everything. But this time, everything was different. They trusted their research, not their feelings. But with Sino-Forest, they didn't do that. Instead of digging deep, they mostly trusted the company's reports and the fact that it was listed on a major stock exchange. It seemed safe. Until one day, everything changed. A research company accused Sino-Forest of lying about its business. They claimed the company wasn't nearly as valuable as it said it was. Investors panicked. The stock price crashed. John's team rushed to sell their shares. But it was too late. In just 2 weeks, they lost about $720 million. Gone. Just like that. And the money wasn't the worst part. The real question was, how did one of the smartest investors in the world miss something this big? When I first heard John's story, I thought he simply made bad investments. But the more I looked into it, I realized that wasn't the real problem. The real problem was something much deeper. Think about the housing crash. John didn't succeed because he was lucky. He succeeded because he followed a process. He asked difficult questions. He checked the facts. He challenged what everyone else believed. He earned that success. But after making billions, something slowly changed. He became more confident. Instead of trusting the process, he started trusting himself. And those are two very different things. With the housing market, he believed the evidence. With gold and Sino-Forest, he believed his own judgment. That small change made a huge difference. It's the same person, the same experience, the same intelligence, but not the same habits. And that's a lesson that doesn't just apply to investing. It applies to almost everything in life. A successful student still has to study. A great athlete still has to train. A successful business owner still has to keep learning. A success isn't something you earn once and keep forever. You have to keep doing the things that helped you succeed in the first place. The moment you stop doing the work, that's when mistakes start to grow. And sometimes, those mistakes cost you everything. By 2011, John Paulson was managing around $38 billion for his investors. Just a few years later, everything was changing. His funds kept losing money. Investors started pulling their money out. Every month, his company became a little smaller. The gold fund never fully recovered. The man who was once called a genius was now being questioned. People who once wanted to invest with him no longer trusted him. One thing surprised a lot of people, though. Even while many investors were losing money, John's company was still collecting management fees. So he was still earning millions of dollars. But money wasn't the biggest thing he lost. He lost something much harder to get back. His reputation. The story people told about him changed. He was no longer known as the man who predicted the 2008 crash. He became known as the man who couldn't repeat his success. But here's the crazy part. John Paulson still had billions of dollars left. The next person we're talking about wasn't so lucky. He owned something most people only dream about. A real castle. Not in a movie, an actual castle. But through one unbelievable chain of events, he lost it. And somehow, he ended up paying someone else just to leave his own castle. I know that sounds impossible. I thought so too. But it's a true story. And once you hear what happened, you'll never look at success the same way again. So here's the biggest lesson from John Paulson's story. One great decision doesn't make you right forever. Success isn't something you achieve once and keep for life. It's built by doing the right things over and over again. The moment you stop trusting the process and start believing you can't be wrong, that's when everything can fall apart. John Paulson didn't lose because he wasn't smart. He lost because he stopped doing the work that made him successful in the first place. If you enjoyed this story, subscribe to this channel for more stories about the rise and fall of wealth. And if you're wondering about the man who lost his castle, that video is already on the channel. Go watch it after this one. I promise it's even crazier than John's. Thanks for watching. I'll see you in the next one.